Welcome to Focus on the Five, conversations with Baldwin County business leaders and entrepreneurs, brought to you by Josh Knoll of Gulf Coast Financial Advisors. And now, Josh Knoll.
All right. Hey everyone, how y'all doing today? Josh Knoll here with Gulf Coast Financial Advisors, coming to you from downtown Fairhope. Welcome to Focus on the Five. Today I've got a guest that has been just a tremendous help to me in marketing with a lot of encouragement, and really you and a handful of other guys are the reason that we're even having this discussion today. I've got Mr. Bradley Flowers with me of Saraland Insurance. I'm gonna let him introduce himself, tell you what he does.
I'm Bradley Flowers with Saraland Insurance in Saraland, Alabama. We handle auto and home insurance mainly, in addition to a little bit of life insurance. We pride ourselves on being a very accessible agency, but also at the same time having that personal touch. So we try to push the bounds of the digital landscape,
right?
But while at the same time having that personal human touch. So I sort of pride myself on that. We do a really good job of making ourselves extremely reachable online.
Right.
We have multiple avenues to contact us, and that's sort of my thing now. Is the customer experience is number one in my head every day. But so auto and home insurance have access to multiple carriers, including Alpha Insurance, which is our main carrier. So.
Okay, very good. Well, one of the reasons I wanted to bring you on was anybody that kind of pays attention to some of the things I do knows that we moved here from a different area, and we moved here from Kansas City, Missouri. And when I was in Kansas City, I was in home construction. And when I was in home construction, I grew up pretty rural area. We'd build houses, we did these things. I moved to Kansas City, a little bit different environment, quite a few more code enforcements, things like that. And for the first time in my life, I learned what tornado wind strapping was. And I'm building these houses with these tornado wind straps, and I thought,
here or up there?
Up in Kansas City.
Okay.
And I thought, well, that's kind of unique.
Yeah.
So it took me a while to kind of learn that. I moved down here. Not that there's not tornadoes down here, but that's not really your primary threat. We moved down here, and it was a completely different animal from what we were used to when it came to the insurance questions we got asked. So,
not only that, but the sticker shock that comes with it.
Oh, good grief. So forget Kansas City. I mean, what would be, what's the difference between home insurance and things of that nature, house in Birmingham versus down here on Mobile Bay?
Well, great question. Obviously, here in Mobile, you're right on the bay. You're
right.
20, 30 minutes from the beach. So there's a bigger wind threat here than there is in Birmingham, so to speak, in terms of hurricanes and things like that. Obviously, right. That area has had a lot of problems with tornadoes and things like that over
right.
the past few years. But what happened really in 2004, 2005, from that point in time to 2011, every insurance carrier in Mobile and Baldwin County sort of got a little bit gun shy and started pulling back from the market, not only in the areas that they write, the premium that they write, but also the number of policies a month in which they can write. The insurance market here, you deal with hurricane deductibles.
Right.
You don't deal, and we can talk about that a little bit later.
Okay.
You don't deal with that in Birmingham, or even really 20 minutes north of here doesn't deal with hurricane deductibles as much as we do down here.
Right.
You also have admitted and non-admitted carriers, which we can talk about in a little bit. A lot of people don't know in the state of Alabama there's two categorizations for types of insurance companies, admitted and non-admitted companies.
No, I had no idea until we went to do home insurance.
Exactly.
Right.
And not that there's anything wrong with one or the other, but you just kind of need to know.
Right.
Also, there's a higher prevalence of claims because you're here on the coast. You're going to have some wind claims. The chances of you living here for 20 years and having a wind claim is pretty high.
Pretty high.
Right. We've had a disturbance a few weeks ago. We had a
right.
tropical storm run through here.
Yes, we did.
And so you deal with a little bit more things on the catastrophic level than you would deal in some of the breadbasket states in the middle of the country.
Right.
So, and then you also have higher premiums. Let's just be honest. You have higher premiums. You also have a lot of companies that write down here don't offer monthly payments.
Okay.
So it has to be paid annually, or it can't be paid. You can't buy them at all.
Right.
So,
well, okay. So on that note, with the wind, and I could be wrong on this.
Yeah.
But is there a difference in premium and the things that you can and cannot insure, or the cost of doing so, with your proximity to the actual water?
Absolutely. And the other big thing I left out is split policies.
All right.
You know, we deal with we have some split policies in our agency, which is split up. So you have, the client actually has 2 homeowners policies that someone in Birmingham would have one for. So down here you have one policy for fire, theft, liability, and you have a separate policy for wind and hail
Okay.
for cost cutting measures.
Keep the premium reasonable, or at least.
Exactly. And then, you know, the closer you get to the bay, the less carriers write, the higher the premiums, the more rules, more stipulations, I think is what you're asking.
Right.
Also, the closer you get to the coast, the further away you get from that, the easier it is.
Okay. What you've seen, this market obviously has exploded. Now, I know Baldwin County housing market a little bit better than I do Mobile because I live over here. But are they different markets? Are they unique to each other? Can you lump them together?
If I had to decide right now, I would say Mobile and Baldwin County are like Auburn and Alabama.
You said it, not me, but I feel it. Yeah.
The insurance market in Baldwin County versus Mobile County is completely different.
It is. The financial is different.
Financial's different. A lot of it, you know, it could be some bigger houses.
And it's not a good, bad, or indifferent thing. It's just different.
But I'll tell you, from a general perspective, insurance. Now, I hate talking heads that make a general statement like it's this way for everybody.
Right.
But if I had to generalize it, I would say that typically home insurance in Baldwin County is a little bit more expensive than it is in Mobile County.
Is it really? Okay.
Mobile County, I think, you know, Baldwin County was hit a little bit harder with Ivan and Dennis back in 2004, 2005-ish.
Right.
Baldwin County, it's a little bit harder to get insurance than it is in Mobile County. And I got in the insurance business in 2011, I believe. And I remember running into that. You know, we would run into a house that in Baldwin County, it might be $2,000 a year to insure it, but in Mobile, it would be $700.
Wow.
And that's with a previous company that I'm with now. But
does it help on the newer construction? Okay, in general, there's a little bit newer construction in Baldwin than Mobile.
Something else that makes it different is the fortified houses.
Okay. So, is there a percentage that you can say that it helps?
It's a constantly moving target.
Got it.
You know, a house here in Mobile and Baldwin County, when you build a brand new house, there's different. So you have the standard building code, which depending on which municipality you're in, there's different building codes.
Right.
And then you have levels above that, which are fortified, gold, silver, and bronze, with gold being the highest, depending on which one. And it's wind resistance is what it is.
Is that what? Okay.
And everybody here, you can go to disastersafety.org. The company that facilitates the fortified program, they actually have a warehouse that they can build 2 1,500 square foot houses in side by side, create hurricane force winds, and see how the wind affects them. And so there was a study done. There's a video on their website. I've used it before in some of my marketing materials. There's a study done on their website where they built 2 houses side by side. One house was built to the 2006 International Residential Code. Okay, remember that. The other house was built to fortified bronze.
Okay.
They hit it, I think, with Category 3 wind.
All right.
The house that was built to the 2012 International Residential Code blew away in about 5 seconds. The other house didn't look like it had anything wrong with it. And what people in Mobile and Baldwin County need to realize from a wind perspective, 90% of the houses, and that's conservative, 90% of the houses in Mobile and Baldwin County are not built as good as that house that blew away.
Wow. So that's
not to discount the builders. It's just it's a higher building code.
Well, I mean, you get to a point on those where, okay, are we just going to pour concrete walls all the way to the sky? I mean, there's a give and a take on livability.
Yeah. Well, in the fortified gold, and we sort of went off on a tangent here, but it's important that people know this. The fortified gold is there's different things that you do to the house when it's built, when you're building it, such as reinforced windows. You know, windows is a big thing to keep a roof from blowing off because the windows go, the wind gets in, lifts the roof up. So you have reinforced windows. You have engineered shutters. So you'll actually see some of the houses in Mobile and Baldwin County, the newer houses, they have a little bolt, a little screw that comes out of the cement, the brick, and the mortar in the windows. It has a shutter that goes over it, and you wing nut it on.
Yes.
Done. There's none of this going and buying particle board from
my neighbor has it.
Yeah.
And it took him like 10 minutes. And,
Yeah.
and it took me like 5 hours
Yeah,
to get my,
exactly.
on whatever.
So you
I
have
think it was
that,
Nate came through.
and then you have braced gables in the roof.
Right.
There's some, and I'm not an expert on this at all by any means, but there's a special kind of tape that they put over the seams in the wood on the roof before they put the shingles on that keeps
Right.
it from leaking.
Right.
So there's different building standards here that can get you, back to your question, yes, sometimes that can get you a 15, 20, 30% discount on your insurance.
Okay.
A house that the insurance might be $1,100 to $1,200, the insurance may only be $1,200 to $800.
All right.
If you build it up to 4 to 5.
So let's I want two angles I want to attack here. First is you've got, obviously, let's just talk Baldwin County. Baldwin County is one of the fastest growing counties in America. And it's not just growing because people from moving from Pensacola. I had Lee Lawson on one of these shows, and the statistics he had were just incredible. And the point being is people are moving in from all over the place. Somebody moves in here from Illinois, Missouri, Michigan. What are a couple things when they go to, what can you do to help ease the shock? What are a couple things they should be prepared for when they start pricing out home insurance?
You move here from Michigan, you're going to have sticker shock.
I would think so.
You move here from Birmingham, you're going to have sticker shock.
Right. Although you'll be a little more prepared because maybe you vacation some down here. You've
Right.
seen hurricanes come
But
through.
the insurance prices here in Mobile and Baldwin County can sometimes be 10 to 30% higher, even
Right.
more so. I mean, it's my average premium's $1,400.
Okay.
Now that's across the board. That's really, really old houses to really, really new houses. I've got some that are in the $500 to $600 range for the year.
Right.
I've got some that are in the $5,000 range, and those people are happy to be paying that.
Right.
So it is significantly more because you're closer to the coast. It's always frustrating as an insurance agent when I get someone from Michigan because they're going to get that sticker shock and go shopping around. And I encourage people to do that in a way.
Right.
Hey, look, you're welcome to go to this person, this person, this person, and you'll see that the insurance is just higher. So usually what we do to prepare them on the front end is we say, hey, look, where'd you move from? Okay, what was the average premium there? Okay, now you understand you're dealing with your biggest threat is theft.
Right. Right. Here, hurricane, I'm assuming flooding.
$500 to $1,500 theft.
Right.
Here it's hurricane and flooding, which really that's separate because no homeowner's policy on the face of this planet covers flood insurance.
Right.
You have to buy it separately.
Okay.
And by flood we mean rising water.
Repeat that.
Yeah.
This is important because the people
Disclaimer, but
I mean,
most homeowners'
Right.
policies on the face of this planet don't cover flood insurance,
Right.
and a lot of people think they do.
That's it.
Additionally,
See, I came from the land of basements.
yeah,
And
right.
and I can tell you,
Yeah.
holy moly, it's a real touchy animal.
If you don't buy if you haven't bought flood insurance, you don't have flood.
There, that's it.
And so I encourage people in Mobile and Baldwin County, even if they're not in a flood zone, technically a FEMA flood zone. So everybody's in a flood zone, everywhere can flood.
Right.
But you have what they call flood zone X, which is what people refer to as not in a flood zone.
Right.
Even if you're not in a flood zone, I encourage you to buy flood insurance because you never know when you might need that. If you're not in a flood zone, it's going to cost you $400 a year, $500 a year, something like that.
Okay.
Right?
Right.
And by flood, we mean rising water. We're not talking about pipe burst.
Understood.
The thing about flood insurance is when there's a storm coming, everybody wants to buy flood insurance.
You're
We had a
right.
storm 2 weeks ago.
Right.
I had, I think, 15 people call me want flood insurance.
Right.
All right?
Little
Even
late.
if I could sell it to you,
The-
there's a 30-day waiting
Right.
period.
Right.
There are the companies, and Chris Green, who is the flood insurance guru, that's the name of his agency, will even tell you it is very difficult to find a flood insurance company that will sell you a policy and you have coverage that day.
Right.
Most of them, it's a 30-day wait. So even if you go to whatever one-off insurance agency
Right.
and there's a hurricane in the Gulf and you buy flood insurance, you're not going to have coverage regardless of what they tell you.
All right. So that's the other bit, leads me right into the other point I wanted to make.
Yeah.
Every area of the United States deals with something.
Yeah.
California deals with drought and forest fires. Kansas City, St. Louis, that area, they dealt with tornadoes. I have no idea what Michigan deals with. No, sorry. But down here, we deal
Robbery,
with what we
maybe?
deal with. Now, when you're dealing with what you're dealing with down here, I came in my side of the world. We had a rampant run years ago in long-term care and in universal life policies with these ridiculously high interest rates.
Right.
And guess what happened as time went on? The actuaries were way off, and the companies did certain things it just became a real mess.
Right.
They could not keep the promises they made.
Right.
I would imagine around here you had, when the area started growing, you probably had every Tom, Dick, and Harry coming in trying to write things. I know that's cleaned itself out a little bit.
It has.
But how do you ensure? How can you give someone some comfort that the companies that you're representing have been there, done that,
Right.
and write the check?
So what happens when there's a big catastrophic event
Right.
is all the big boys start pulling back a little bit what they're writing, and you have these small companies coming in, just what we call it buying business. They're selling a product at a price that's too low for them to make money,
Right.
in hopes that
Right.
down the road they can raise that premium and make their money back.
My side of the industry, they do it with no-cost index funds.
Right.
Inherently, nothing wrong with them.
Right.
But if you've got to understand, if you are purchasing this product, it's to get you in the pipeline in hopes that you do something else with that business.
Same thing with this. And so what happened in 2011 when I had first gotten into the PNC business, there was a carrier that was the most popular carrier in Baldwin County.
Okay.
I was actually selling insurance in Baldwin County. It was a carrier that their total assets, their total money they had in the bank to pay claims was about $200 million.
Sounds like a big number.
It's not.
It ain't nothing.
Sounds like in
this world,
this company writes nationwide.
Right.
Or wrote nationwide, and I don't even remember the name of the company, but they wrote nationwide, not Nationwide Insurance, but they wrote nationwide in the country.
Right.
All right. Their total exposure was $200 million. Or excuse me, their total money in the bank was $200 million.
Yep.
Their exposure, in other words,
had some B's in it.
Their exposure in Baldwin County was $250 million.
Just in Baldwin County.
And they wrote nationwide. So a big storm comes up. I have a client that says there's a storm coming up the trough.
Yeah.
A big storm comes up the trough.
Right.
And so what you have is, in the state of Alabama, you have two types of companies in terms of classification purposes.
This comes back to the...
You have admitted companies and you have non-admitted companies.
All right.
And essentially what it means is an admitted company is, so to speak, endorsed by the state. They're backed by the state guarantee fund,
right,
which works sort of like FDIC for banks.
We have the same thing in our
exactly.
life insurance. Yeah.
And then you have the guarantee fund for life insurance.
We have something. Your insurance company goes out, craps out, they step in and they pay the claims.
And then you have non-admitted companies, which are not backed by the state guarantee fund.
Okay.
In other words, big storm comes through here, they run out of money, they don't have to pay you, and you sign a form, whether you know it or not, you sign a form when you do business with these companies that says, now, are all of those non-admitted companies bad? Absolutely not.
Correct. Right.
Some of them are the most powerful insurance companies in the world.
Right.
I represent some non-admitted companies, right? I don't represent non-admitted companies that are ranked below an A+ or an A.
Right.
Right.
Same here.
You just have to know, hey, it's just like going to a fast food joint. There's some fast food joints that are good, and there's some fast food joints you want to avoid.
Right.
I don't mind McDonald's, Burger King, Whataburger, In-N-Out Burger, Chick-fil-A, but I am not going to a Long John Silver's or Captain D's.
You're right.
It's the same thing. You just have to know. So it's good as a consumer to be educated. Right. There are such things as admitted, non-admitted companies. Now, out of those two, who usually offers the lowest rate? The non-admitted companies.
Right, because they have a certain limit, basically.
Well, for two reasons. One, my opinion, I think they know they can pack up and leave if they need to.
Right.
But also, because they don't have to deal with state filings and state regulations, they're a lot more nimble.
Right.
And sometimes that rate is actually closer to the market, to what it needs to be for that risk.
Understood.
Whereas the big boys, the guys who are backed by the state, every year have to file with the state for a rate change.
Right.
So sometimes they may know, hey, the correct rate for this area is this, but we have to wait for the rate filing before we can change it.
Right. Well, I guarantee your grandma or grandpa, or maybe even your mom and dad, what would they say? You get what you...
You get what you get, you don't pitch fit?
No, they would say, you get what you pay for.
Yeah, yeah, you
get what you pay for.
We can edit that.
No, I think it's pretty good. No, I mean, you
get what you absolutely get what you pay for.
Yeah, because we deal with it obviously, anytime you're in this line of work, one, part of what you do is viewed as a little bit of a commodity. But what I try to impress upon people, and this really translates to yours, is there's very few things as emotionally devastating as your house becoming destroyed, or at least radically destroyed. And then I can promise you, there's very little worse things than making a call and saying, well, we don't really cover that.
Right.
Or, yeah, let me send you to this 1-800 number of somebody you don't understand.
Right, exactly.
So,
And I'll tell you, and I lose. There's one big 1-800 number that I lose business to more than any other company.
Right.
But I also get more business from
once
them than any other
something
company.
happens.
Well, not even that. They go and they don't realize. Oh, wait, I can't text my agent.
right.
Oh, I don't even have an agent.
What we have found, I akin it to a lot of times in my line of work is you can go through life and not get married, and things probably be fine. But you get married because relationships matter.
Mm-hmm.
And in my line of work, when the sun is shining and everything is great, I'm only so useful. I'm really useful when things go sideways.
Yeah.
When you need somebody to answer the phone, you need somebody to go to bat for you that's got a relationship with the insurance provider to get something done.
Yep.
And there's no way, they have yet to figure out how to replace that with a computer. We'll see. Maybe someday they will. But right now I know relationships matter. And I know when you're talking major ticket items like your home, even your car to a certain degree, obviously. But what you want to know is, it's one of those things where you want to set it, make sure you do it with a reputable company, and then those things come.
Well,
you want to know that you make a call.
It needs to be within reason. I mean, I'm not sitting here telling everybody they need to be insured with the most expensive company out there.
Well,
I mean,
a lot of times
my
they don't even
my beeline is always, okay, I'm going to try to save you money while at the same time protecting what's most valuable to you.
Well, no, my point is, I've developed relationships over time with AA plus rated companies that are just as competitive, and I know how they pay.
Exactly.
I know how they pay.
Exactly.
And so when someone sits down, well, how's this company work? Well, I've had a almost decade-long relationship with them that do great. They're fine, right?
Yeah.
So
and the next thing that we need to talk about are the deductibles.
all right, yeah,
Right.
hurricane deductibles or just deductibles?
So in general, the way, not even your grandparents, the way your mom and dad bought insurance, right?
Mm-hmm.
They go to the insurance company, they sit down and talk to the insurance man.
Right.
The insurance man says, what deductible you want?
Right.
And it was 100, 250, 500, maybe 1,000 if they were one of these people that wanted to get the lowest price
That's
they
right.
could.
That's right.
Nowadays, you can't in Mobile and Baldwin County, and really anywhere, but especially here, you can't get $1,000 deductible.
Right.
We're just talking about the regular deductible, right?
Right. Even if you wanted to spend a small fortune doing it, you're not going to get it.
Yeah, most companies start out at 1% of the coverage amount.
Right.
So if the house is covered for $200,000, 1% of that is a $2,000 deductible.
Right.
Right? That's usually where it starts out. There's some companies that still are doing flat dollar deductibles. I represent some that do flat dollar deductibles, but mostly it's going to be a percentage based. Right? Now that's just your fire, theft, liability.
Okay.
And then in a lot of cases you have a separate deductible for wind and hail.
All right.
And a separate deductible for hurricane.
Yep.
And those are usually higher percentages. So typically in Mobile and Baldwin County, the lowest deductible you're going to get for either wind or a hurricane, and there is a difference, and we'll talk about that difference in a minute.
Okay.
But the lowest deductible you're going to get is going to be a 2% deductible. So you've got a $200,000 house, which is a small house in Baldwin County.
Sure.
You have a $200,000 house, 2% of $200,000 is $4,000.
Right.
Right off the bat, a storm comes and you have wind damage, the company's not paying anything less than $4,000.
Right. Not paying anything until 40 green's been.
Yeah.
Right. Yep.
So you need to know that. And usually they do 2%, 3%, and 5%.
Right.
I've even seen some 10% deductibles.
Right.
And the thing is looking at that on a deck page or on a quote sheet,
Right.
you see 5% or you see 10%. It doesn't really resonate, but 5% of $200,000 is $10,000.
And that's real money.
So what I tell people is if you don't have $10,000 sitting in the bank, you don't need to buy this policy.
Right.
Or you either need to know, hey, I'm not filing a claim unless this house is blown away.
That's right. My side of the aisle, we deal with that with elimination periods on the DI that
exactly.
we do. Same thing. They have this thing, they say, this guy is so much cheaper than you. I said, I'm sure he is. He's not paying you for 90 days.
Exactly.
Do you have 3 months saved up? Well, no.
Yeah.
Okay, then let's look at balancing this.
And that hurricane deductible or that wind deductible is usually the biggest X factor in the insurance. I deal with a lot of loan officers and real estate agents on a referral basis, and they'll come to me and say, hey, such and such John Smith has got this price. It's $1,500 for insurance.
Right.
But we have a DTI issue. We need it less than $1,500. The very first thing I ask is, okay, what's the hurricane deductible?
Right.
Or if, let's say, you just come to me for insurance and you're shopping insurance, you're not happy with the price you get.
Right.
If you right now ask me, I want you to quote my insurance, the very first thing I'm asking is what's your hurricane deductible?
Right.
Because that's the biggest X factor, because what an agent will do is you'll go down the street to John Doe Insurance Agency and you'll say, hey, I want to get a quote. If they're not, I'm not saying they're not ethical, but if they're trying to manipulate a few things, the first thing they're going to do is they're going to give you that 5% hurricane deductible.
Right.
that knocks $300 to $400 off the rate, but you
Right.
don't know that you have to pay $15,000
Right.
if you have a claim,
Right.
right?
Yep.
Now, then you get into wind deductibles and hurricane deductibles, okay?
Right.
There's a difference,
Right.
all right? So let's say you have two guys, they're neighbors. Let's say your neighbor next door to you. Let's say I'm your neighbor,
Right.
okay? You have a 5%.
I'm living in the
you
hood,
have,
man. What happened? I had such high hopes. I'm just kidding. Go ahead.
You have a 5% hurricane deductible.
Yep.
You have a 5% hurricane deductible. I have a 5% wind deductible.
All right.
All right? We both have roof damage last week. What was the name of that tropical storm?
Yeah, tropical storm.
Or it was actually a hurricane.
Yeah, it was hurricane hype and ratings. I think
Yeah,
that's what it was
yeah.
called. Hurricane
So-
increased our ratings.
So
Sorry, no
this
offense.
hurricane comes through, okay?
Yep.
When the wind bands touched Alabama, when the wind bands touched the state of Alabama, it was downgraded to a tropical storm. It
That's
was.
right.
It
Yep.
was.
Almost immediately.
All right?
Yep.
Both of our roofs are blown off.
Right. Who gets paid?
Who gets paid?
I
do.
no, I do.
You have the hurricane deductible.
Because I got the hurricane because it's the
The
wind
hurricane
source.
deductible does not apply because it was downgraded tropical storm. I have a wind deductible, so even just the
I'll be
wind
dang.
blowing heavy one night, it's not an event. I still have to pay my 5% because it was a wind event. So we run across people a lot of times, they're with XYZ carrier and they're proud of this 1% deductible that they have
Right.
or 2% deductible
Right.
that they have for wind, and I'm able to give them a 2% for hurricane. They think that's the same. That's not apples to apples. That's a better policy than the wind deductible. Now, at the same time, just like the admitted, non-admitted, there's nothing wrong with the wind deductible as long as you know, hey, it's a wind deductible, not a hurricane deductible. There's a difference. Hurricane deductible sounds worse.
It does.
If you think about it, like just it
Right,
sounds like,
right.
oh, it's a hurricane deductible. It's actually better.
So you don't want to be sitting there praying, please go to category 1. Please go category
You don't
1.
have to do
I
that.
gotta,
Yeah, I mean,
or please go to tropical storm.
yeah.
Well, I think here's the bottom line from all this. And this is what anybody that follows some of the stuff I do is when you're trying to do risk management, because you and I, at the end of the day, obviously I do the financial planning, but also do a lot of risk management.
Yeah, risk
at the end of the day is try to figure out the things that you have time to master.
Yep.
And the things that you don't, try to find someone out there that seems knowledgeable, that seems you can trust, has a reputation, and then outsource those things. And if you outsource it, know that it's going to cost maybe a little bit more money in the short run.
Yep.
But when things go sideways, it saves you in the long run. And so I think on that note, I've learned a lot on this. Here's the thing. When it comes time, because mine's coming, I'm just going to basically say, hey, listen, I want to learn to a certain degree, and then I want to be done with it, right?
Right, and that's a mistake I think a lot of financial advisors and insurance agents make is they try to be a little bit too educational.
Right. Hey,
Yeah.
Hey, hello.
And,
Right.
and it when in the day the client just wants to pick you because they trust you and hey,
Right.
take care of it.
Right. Literally, I'm okay if you tell me how the sausage is made, but I don't need to see how the sausage is made.
Right.
Right. Okay. Well, man, I want to thank you for your
Yeah,
time. Anything last points you want to add on that before we wrap this up?
If you have any questions, see him for life insurance and I'll help you with the P&C.
Very good. Josh Knoll, Gulf Coast Financial Advisors. Mr. Bradley Flowers, Sarah Land Insurance. Thank you all for your time. Contact info will be at the end of this video. And obviously, with all the platforms that Bradley and I are on, y'all can know where to find us. Thank you and have a great day. Job.
Thank you for listening to Focus on the 5. If you are interested in learning more about Josh Knoll and Gulf Coast Financial Advisors, you can find us at gulfcoastfa.com, call 251-327-2124, email josh.knoll@gulfcoastfa.com, or message us on Facebook. Focus on the 5 is produced by Josh Knoll of Gulf Coast Financial Advisors. Advisory services offered through Investment Advisors, a division of Pro Equities Inc., a registered investment advisor. Securities offered through Pro Equities Inc., a registered broker-dealer and member of FINRA and SIPC. Gulf Coast Financial Advisors is independent of Pro Equities Inc. Information presented is for educational purposes only and is not an offer or solicitation for the sale or purchase of any securities. Focus on the 5 offers commentary and generalized research, not personalized investment advice. Show content is for informational purposes only and does not constitute a complete description of our investment services or performance. All investments involve risk and unless otherwise stated are not guaranteed. Be sure to consult a tax professional before implementing any investment strategy.